Hi, everyone. It's Danielle Marie from The One Realty here in Austin, Texas, with your weekly real estate update this is going to be for the week of the 19th. So what we're going to do is we're going to look at what happened on yesterday, so March 19th, compared to where we were on March 13th. So if you've been following anything as far as interest rates, we've kind of been bouncing around a little bit. But last week, which I didn't do a full update, I just did a few posts, we saw our biggest week of pendings yet. We had 214 houses, which it doesn't sound like a lot, but went pending. It was like 121% week over week. So where did we end up this week? How strong are we in comparison? So here we go. We are about to dive into the numbers today. So first and foremost, when we're looking at this, so our number of active listings, we have started to see a rise in our active listings. So week over week, we had 150 more listings. You can see right here, 214. As we go all the way back, if we go all the way back to December, we were at 1885. But to give you an idea of where we were last summer, so in July, we were at like 3,600. So significantly more still than today, but we are inching up there. As well as our average price point moved up to a little over 1.2 million. Not a big swing there. Our median price also went up another 15,000. These aren't huge swings, but you have to realize is that as we get closer to summer, we typically see our higher price properties hit the market. Not only you'll see more people with high school and children graduating, and those bigger houses start to go on sale as well as this is the time of year when we are seeing our lakefront properties hit. They know that they can get kind of the best return when they're putting their houses on, as far as on the lake, before people want to be on the lake. So people are revving up for the summer. We're starting to see that. We have continued to see a decrease in our days on market. So at one point we were over 108 days, and now we are down to 73 for our average. So this is a sign of also getting a lot of new inventory coming on, as well as old inventory moving away. But speaking of old inventory, if you see right here, the number of listings with price reductions, we dropped down another 0.5%. So yes, we had 51 more listings this week with price reductions than last week, but still our overall percentage, because of our number of active listings going up, we also saw that drop down. So once again, that is a sign as far as for sellers that we're getting a little stronger, because sellers aren't necessarily dropping their prices. This is also for buyers to realize you're probably not going to see as many price drops. You're also probably going to see, as there's a lot of I can tell you right now, there's probably a lot of buyers circling and waiting for properties. If a new property comes on the market, you can expect that those deals that we saw that were happening in November and December and kind of January too, they're kind of going away. We're not seeing as many deals just because there's buyers out there waiting and watching. I got 2 under contract this past week. I know for a fact, because I've seen them, there are buyers out in the market. Also, for our new listings the past 7 days, we had 19 more than last week. And then the other thing I always like to look at is, what are our relisted listings? Like, these are houses that were previously on the market. They came back. So yes, our inventory went up, but how many of them were relisted? It was only 23. So not a huge amount of relistings. We'll probably kind of see that probably stay very similar for the next few months. A lot of the new relistings typically happen after the holidays. So January and February, we saw a lot of them. If a listing has been off the market for more than 90 days, their calculator resets for the days on market. So we're not going to see those. So if you have your house and you took it off the market and you're thinking about putting it on, if you can wait 90 days, that's going to help you a lot, because it's not going to look like a relisted listing when it comes to the total days on market. An agent would have to dive in, or a buyer would have to dive in and look at history to really find out when it was previously on the market, which a good agent will do. And then as far as the average price point, I talked about of the past 7 days, I talked about it going up, and you're going to see that right here. Our average price point went up for the ones that were listed this past week, but actually our median of the new listings kind of went down a little bit. So kind of interesting to see where we're at. Now, here is my leading indicator, and we talk about it a lot. So I'm going to pull this up. So we're going to keep staying kind of in this pending listing realm. So with pending listings, we are going to look at what is our leading indicator? Where are we pending? Because if we look at what we're pending, this will give us an idea of what are sold and what's to come. So our pending listings it only went up 10 week over week, not a huge thing. But you also have to remember that we also have houses closing out. And so kind of two things. Like this past week, we had 184 new listings go pending, or new listings and new pendings, I should say. They're not new listings, but just pending listings that went pending. Last week, this was a big week. Last week, we hit 213. If you know Mike Zuber from One Rental at a Time, we had a conversation. We thought it would happen in February. Happened a little bit later, first week in March, but we still saw that. To give you an idea of where our pendings are, I've been tracking this for a while, week over week, because I want to see, hey, where is our pendings? And you can see back in September, we were in the 30s, the 40s. We see interest rates all of a sudden drop in September. So that's why we see kind of a spike here. It gets really abysmal in December and January. And then you can kind of see where we are at 184. So week over week, we went down. You can see that big jump from last week that I talked about, that 213. You're seeing that right here. But as far as like 184 for the spring market, it's not crazy high. It's not crazy low. I think there it was. Also, interest rates kind of piped up over that weekend to 6.81. Nothing crazy. Our interest rates are kind of staying below 7%, which if you look compared to last year, we're doing better if we look at year over year, where we were interest rates year over year. Last year in March, we were starting to see our interest rates start to climb for the remainder of the summer. With that, we'll head back over to our weekly data. And here we're going to see, once again, our pending listings that we're seeing and what we're doing for our pending. So our 184, great to see that. Our pending list price, our average price, this is going to give us an idea when we start looking at sold data, when we're starting looking at comparable, like the strength of the market where we are. Looking at what's pending is always a good indicator of, are we going to go up? Are we going to go down? So week over week, we went down for our average, but our median kind of steadily rose a little bit. You'll also see that our average days on market significantly dropped. And this is where, in comparison to like active, so you see actives at 73 and 37 for our average and median. Our average and median over here is at 56 and 23. And the reason this is important is because all of a sudden now we are seeing new listings hit the market, go under contract, and go significantly faster. Also, the number of listings with a price reduction, we dropped down to 36.91%. They are going and they are moving faster. Now, let's look at closed sales. So closed sales right here, we see a small increase to 20, go up about 20 for 653 is our closed in the past 30 days. Small increase, but we are not where we were last year. We kind of jump into that in a little bit. Our average sales price kind of stayed the same. So did our median. Nothing really changed significantly week over week for our rolling 30, just a few more houses going under contract. The other thing that I like to note is this right here, closed price to list price, which is closed price when it's currently listed to what it was. So closed price to what it's currently listed at, and closed price to its original list price. That kind of shows you how much are the sellers going down, what's the negotiations. If we see these numbers drop significantly, we know like, hey, buyers are being able to take advantage. They're getting better deals or not. It honestly has kind of stayed the same. We haven't had any big ebbs and flows. That's partially also the fact that we're not seeing as many sellers reduce their list price. So we're probably going to see some continuation of a tightening right here of the closed price to list price in comparison to closed price to original list price, because the original list price is going to end up being the current list price as we continue to move on. So we are already starting to see that gap close. With that being said, if you watch, you know that I also like to give you a monthly shout out. So if you haven't seen my February data, I've got all my February data. You can go on. I actually have another live stream that I did. You can find it on YouTube. I'm at Austin Real Estate on YouTube, or you can find it on X at the1_realty.com. But let's look at where we are faring for March. So two things that we look at. So two things is, one, I'm going to look at year over year data because that's very important. I can't just look at last month because there's also seasonality. I have to also look at year over year. So year over year, which is expected, we are down as far as what we've closed at for. So we're only halfway through what we sold last year at this time. Now, if you remember, interest rates were down in February of 24. So we saw a big spike of buyers that started to come back early in the season in 24. Now, we didn't necessarily have that as much this year. So I'm not expecting us. We didn't in February. I don't think we'll beat our numbers in compared to last year. And also for historical, we're way down. So you can see historically, our historical average of what we closed in March is 956. Today, we've closed 364. If we go and we look at our pending numbers, that kind of gives me an idea of, hey, what's pending? 894. There's no way we're getting the 900s. I venture, and this is based on kind of what I've seen and where we even like closed out. So we closed out 538. We have in February, we were closing significantly more. I'd say we're probably going to get up into the 600s. Is probably my best, I say, guesstimate, but using the data that I can see as far as pending listings and as far as where we were last month compared to this month. So I think we'll be in the 600s. I think we're going to be low. I think we'll beat, or here was the low was in 2023. We got 718. Is there a chance to beat it? Perhaps, but I think that's going to be very close. But what we are seeing is we are seeing our average sales price. So right here, you're going to see our average sales price and our median sales price. Currently, year over year, we are up just under 2% for both. That's not a huge number. If we look at where we were in February's year over year, we were 8.78% above our average and 5.57%. And this is also important because that was February. Where did we end up for January? January, we're at 7.7 and 1.1 for the median. You can see that it's trending upward. Where were we in December? December, we were at 10.8% year over year, 7.43. So everything indicates that we're having a positive increase in our prices year over year, that we're seeing that. Now, the rest of these, so average days on market is a little higher. We've kind of seen that data, that trend. We've seen that we're year over year higher. And then this is where it's really kind of interesting too. As far as our close price to list price and close price to original list price, people were getting, sellers were a little bit tighter last year. They were getting a little bit more. The deals that were out there weren't, I say, necessarily as strong. And also the reason this is that we saw that increase in February when rates went down in 24. In February, we saw buyers come back, and that's what you're seeing right there. So I'm not surprised by it. If you know the historical data, this will help you. You have to understand the historical information. Now, at the same time, if we look at our month over month, so this data, when we start looking at close price to list price and all of this, we can also look at what was happening last month. And so what you're seeing right here is close price to list price, both the average and the median, and close price to original list price. You're going to see that we're trending upwards. So that once again goes back to the fact that sellers are getting a little bit more, sellers aren't dropping their prices as much, as well as the competition. So if newer houses coming on the market, if they're getting off the market sooner, which means also our days on market, if our days on market go down, which we did see and we have been seeing. So if we look at our weekly and we look at our days on market for our pending, so we're at 56 and 23, and we go back 59 and 27. And if we're looking at, if we look at the month, so this was 5 March, and if we keep going, what you're going to see is we have dropped down substantially. So if we go all the way back and we're talking December, we were like 85 and 65. And today we're at 56 and 23. So substantial drop down as far as the days on market. Now, you've probably seen the headlines, and we've talked about this a lot. So I'm going to remove this one. You've probably seen the headlines, Austin prices dropping 3% and everything like that. But what you don't understand, or maybe you do, is that Austin's Metroplex is so dynamic. So you go about an hour and a half in either direction. And I'm talking, if you go north, you're going to Gerald. If you're going south, you're going to the San Marcos area, Buda, Kyle. If you're going east, you're going out to Bastrop. If you go west, you're going out to Spicewood. All of these areas are so vastly different, and they're not as strong a market as the actual city of Austin. So all of my data is based on the single family homes in the city of Austin. So if you're just joining us now, we just went over kind of what's happened week over week. Feel free, if you like this also, if you like this, give me a follow, give me a like. That way you can find it or save this information so you can also find this in the future. But what I want to do now for you is I kind of want to expand your eyes, and I'm going to give you data that most people don't see and most agents don't share. And this data right here, I am going to show you where we are with a lot more historical trends. And I think this is going to help significantly more than you can even imagine. So if you're looking at the Austin real estate market, let's take a look at this data. And if you're thinking about buying or selling in Austin, feel free to reach out. Let's talk. Let's build up a strategic plan to set you up for success. So we're going to hop on here and we are going to look at some data for Austin. And let me hold on one second. Let me get to it too, so that we can look at it. So first and foremost, so sales and pricing, and this is kind of, we talked about February's data. So what this is really focused on, these are all of Austin, kind of everywhere that we're focusing on in Austin. And you can kind of see, hey, here's our median sales price at 5.2. Our average sales is 10.6. And they pull this real, so theirs might be slightly different than my numbers. Sometimes I did those numbers the other day, so they might have a few more they've had 4 more closeout. I was at 534. So that's kind of what you're seeing right there. With that being said, we can kind of look at market pricing and we can see where are we now compared to where were we historically. And there's all these different years, but kind of some of the things that I really like to focus on. So you can see here's your sales price per year, but we really want to start looking at where is our monthly pricing. So bear with me for a second. We are going to go right here and we are going to look at some sales and pricing. So you're going to kind of see here, what is our average sales price? What is our price per square foot? And you can see from February, our average dollar per square foot is at $350. And you can see if we go back to February of last year, it was actually lower than we were last year, kind of exactly what we expected. And we can kind of see where did we like peak out last year. So you're looking at last year and our peak was really in July as far as dollar per square foot. But if we want to look at our peak sales price last year, it was in May. And so you have to also think about it. Our home sale, and you want to go a month prior. So anything that's sold in May went under contract in April. And so that's really showing you, hey, April was the biggest month as far as listings that went pending and as far as demand and closest and highest prices. If we look at buyer demand, this is going to kind of give you a better picture too. So this is buyer demand. And so this is going to show you, we're about to hit off, which is funny, 2022. You can literally see when it happened. I remember telling you people, August is when we felt it. It started in June, and you can see it right here on the chart. So this buyer demand shows what are houses going from list price or the sales price to list price or sales price to original list price. And you're going to kind of see and track to see where we are. So if you can see, if we're looking this year of what happened in February, you can kind of see we're under 2.9% under asking, and then 93.93% of close to original list price. And if we go to February of 24, you can kind of see very similar data and kind of what is a trend. So you can also see that it looks like we're popping off right here. We popped up here. So the question is, how long does this go? If we look at prior years, we can only go back so far too, but normally it lasts a little bit longer. The other thing is you're going to see days on market. So this is where it crushed us this year. Our days on market, we were like the highest that we've been for a while, even from when we started in 2022. So our days on market were significantly higher. Not necessarily a lot of price drops going on this year. We've kind of stayed a little bit longer, but I think that's what sellers are expecting. Sellers are expecting it to take a little bit longer. You can also see down here, if we go to price, this is average over under of where houses are selling and kind of what houses are doing the best. So what you're going to see right here, this is over under what's the change from the prior year, average percent. You can see as far as the ones that are getting closest to list price right now, that 1.8% is what the average is, and that 1.2 to 1.39. So you're seeing a lot of buyers, I say, in that area, or sellers stay really tough in that area. You can also see here's a breakdown of the months of supply by price. You are going to see your deals. The more months of supply you get, the better deals. So you're going to see obviously that 1.4 million, you're seeing the highest. This is also going back to Austin's market getting really competitive. If you are between I'd say really between 200 and we'll go all the way up to like, gosh, this is crazy, guys, go up to 900. You're seeing that our months of supply were under 5 months, which means we are leaning towards a seller's market. So don't be surprised if you are in like the 600, 700, or if you're in the 300 and the 400, that you are going to be competing against people. We're just seeing it right here based on months of supply and based on what people are bringing to the market. Other thing is new in listings. How many new listings we're going to have? So February this year, we had 1,039. If we look at it, it's less than last year. So we had fewer new listings this year than last year. So you would think that we would have a dramatic increase in inventory. We're not necessarily seeing that. So it's really we're going to see these next few months what happens. If we increase our inventory rapidly, that's going to help buyers. If we don't, it's going to help the sellers that are currently on the market. Also, for our under contracts are lower this year at 657 compared to 747 last year. Remember, last year we saw the dip in interest rates, and that's why you see this huge climb right here, this dramatic upbeat. And that's also what we're seeing right here. We had the same thing. Now, last year, the interest rates dropping down kind of ended around March, April. We got up there to the peak, and then we plateaued and started going down. And so the thing will be is that if we do the same thing this year, if interest rates kind of plateau and we don't go further down, you can expect their number of sales to also go down. Now, finally, I kind of want to show you a little bit of price drops. So this is really interesting information. Out of all the houses right now, 43% of them have had a price drop. We kind of talked about that. The average price drop is 8%. That's kind of an interesting fact to know. When we look at your property, so if I am actually helping you as a seller or as a buyer, we're going to look at your specific area because that is going to give you more detail, a macro environment of what is happening with the sellers in that area. I think that's really important to understand what's about to happen or what has happened. But this is just general information all over Austin. Most houses are dropping their prices at the 61-day mark. That you're kind of seeing. So that's some good good information. You're also seeing houses are going under contract about 17 days after they've had their price drops. And you can see the price drops over time. And so if we look at this year, we've had a little over 1,000 homes have had a price drop at like 7.1%. Last year, we were a little bit higher. So last year we were at like 7.7% of the houses. I'm sorry, hold on. Q1. Oops, this is right here. I went way fast. Sorry. I knew we were close. Last year was higher. Last year was 8% versus 7.1%. Now we have to do like 90, I think it's 93. It's 93. Yeah. 93 more homes have to have a price drop, that's the next 10 days in order for us to have more price drops this year than we did last year. That's really, really going to go back to, how strong the market and everything that is happening in the Austin real estate market. Now, if you're just joining in, feel free to save this, follow it, like it, share it. That way other people can see it. I'm showing you data that you're not going to necessarily get everywhere elsewhere. And the reason is Texas is a non-disclosure state. So even Zillow, Trulia, Realtor.com, all of those places that have data, they just have data on listings. They do not have data on sales. And that's kind of what I'm bringing you here. So finally, this is kind of, if you want some years and sales data, we can see last year what's happened. We can kind of see where we currently are for our sales volume in numbers. You can see that we've not touched. So this is why I always talk to people as we talked about stored up demand in Austin. And, Austin's plummeting. It's continuing to plummet. Well, what I tell people is at the same time, we're historically underselling. These past 3 years have been brutal on the market. So when buyers do eventually come back, yes, there's people moving away from Austin, but not at the amount that would cause that. There's not as many that are moving away as buyers that are built up. So if we look before 2020 and 2019, before we were selling around 11 to 12,000 homes per year. Look how many homes we've sold in 24, 23, 22. We are significantly undersold in these years, and we're already significantly underselling this year. So what does that mean? If interest rates drop, or when, I'm not saying it's this year, I'm not saying it's next year, I'm saying, but if interest rates drop, buyers start to say relevancy, or what's kind of the time that it's been since they started buying, like new first-time home buyers right now, the ones that I have, they weren't looking 3 years ago. Rates at 6 and 7%, that's kind of normal to them. And so the relativity, like they're not even looking at, they could have never gotten a 3%. They could have never gotten a 2%. So that's just what they know. So they're coming back and they're buying. So that's what we're going to see here, is that if we do see an uptick, it's going to be either rates are going down or people are just done renting and buying, or renting, and they just want to buy, and that we're seeing that. So you can kind of see there is significant pent-up demand here in Austin. It's just a matter of when we're going to see action from those individuals. If you guys have any questions, I know I've got a lot of people hopping on right now that are watching this live stream. Feel free to leave a comment. I'd be happy to talk about it. And we can also get into the nitty-gritty details. If you have a house that you're thinking about selling or buying, really we can break down what is the area, do a macro and micro analysis for you. So without further ado, I'd like to say thank you for joining me in. You be sure to follow me and set notifications, because I will be doing this weekly to understand the Austin real estate market, especially as we get into prime buying and selling season. Have a wonderful day.